All right, good morning. Good morning, everybody. Welcome. Happy Wednesday. It's good to see everyone. We're going to give it just a minute or two to let those in the waiting room join us, let the audio connections initiate. Good morning, Perry. Good to see you. Final day of January. Crazy how fast it's gone by. Pretty good start. Pretty good start to the year, I would say. Um, yeah, feeling good about it. Hope everyone's feeling good. If you have concerns, let me know what they are. Um, in your trading and what you're seeing, if it's your lack of trading, let me know. If as we're going forward, if you find that you're not as comfortable as you would like with what you're doing, what you're developing, um, then certainly make sure to voice it here. Send me an email, put it in the Discord chat. Good morning, Bob. Uh, Glad you got the picture to show. Very cool. All right, let's dive in. Welcome to the Market Watch Group midweek check-in. I am Scott. I will be your host, as always. Not as always. Gary is going to, as I've said, increase his role. I've just got to get the next couple of meetings he's going to run planned. He'll be back with us soon. Here are the disclaimers. As always, education and illustrative purposes only. We are not investment advisors. Even when we provide guidance and alerts, that's all they are. All trades are your trades. Here is today's agenda. We're going to discuss today's opening analysis. We'll look at the futures first. We know we got a lot of information coming out this week. We've got from all three primary sources of information. We've got economic information by way of employment news. We have Fed information by way of the meeting that culminates today. Uh, no expectations for interest rate moves. God, I'll tell you this though, as an aside, it's been a long time since we've had a surprise, a Fed surprise. I want to say, if you can remember a different time, I want to say the last time was during the reign of the hallowed Alan Greenspan. I'm trying to think. I don't think um, Yellen or Bernanke were big on surprises. But Greenspan would throw down a good surprise. That's for sure. That is for sure. Okay. Okay. So we'll look at the futures, look at the news. We're gonna take a look at our posture midweek to see are we on point? Is what we were looking for to developing. Um, do you have any trades you're carrying? Let's talk about mindset for open trades. We'll review the watch list to see, do we have anything ready to trigger a trade? Are there any setups that we see? And we'll explore those. And then we'll talk about the trading plan section of the week. Let's dive in. Okay, let's start here. Make sure this is right up to date. Futures. Interesting. It's an interesting mix. The S&P's down about 0.5%. About 0.5%. The Dow is up. So a lot of what we've seen from the Dow recently, we've said, hey, there's bullishness in the Dow, but it doesn't feel like defensive bullishness. It feels like it's corollary bullishness. Today, it feels a little defensive. It's like, whoa. Now, I'm not going to make a judgment in one day. And quite honestly, we've been expecting a consolidation. I thought this consolidation that we're seeing in the futures on the Dow and the NASDAQ might have started on Monday or Tuesday. It's Wednesday. Okay. This is fine. This is in line with what we've seen. Dow futures staying up means what? Well, we might see a sector like industrials holding up today. Oh, well, industrials is where we identified trading signals for this week. So, yeah, okay, let's talk about all of this. NASDAQ down 1%. Now, that's the big one. The NASDAQ's down 1%. We know that we're getting earnings from a lot of different NASDAQ-related stocks this week. Microsoft, Facebook, Meta, whatever. Some chip stocks, Amazon. I mean, it's a pretty big list. And we've got jobs data coming out. So we've got earnings, jobs, and Fed. It's a lot. We've got a lot of potential there. So we're going to be watching closely. NASDAQ futures sink. I don't know if I would say sink. I mean, 1% is a pretty good drop for sure. I mean, it's definitely. What else? Why AMD will have a leg up on some AI rivals. We like AMD. We've been traded it a couple of times recently. Yeah. Yeah, this is what Bob was talking about. He said poor Elon, the judge, shot down his $50 billion salary. Musk's $55 billion pay package voided. Interesting. Very interesting. All right, so let's look at the calendar to see exactly what it is that we have in front of us. So we have ADP came out at 107. So that's a small disappointment. ADP has much more tendency to fluctuate and sometimes miss. Even at this miss, it's still, adding jobs. Okay. I'm more concerned about non-farm than I am about ADP always, but I do pay attention. I don't think the ADP is what's doing anything to us today. Yesterday, jobs, consumer confidence came back just slightly lower than expected, which was fine. You'll notice it didn't impact the market at all. Why? What would make that fine? Well, what made it fine was the fact that at 115, it was a large jump, and it almost did it. That's pretty reasonable there. Job openings came back better than expected. Price index not as good as expected, but better than before. So seeing an increase, a stabilization in home prices. Okay, great. There it is. Is it now a time where good news is bad news with respect to the Fed? Depends on the good news. If the good news was sales being higher, that's good news, but to the Fed, it's not, because that's going to put upward pressure on the prices. So any good news that indicates pervasive inflation, not good. But at this point, with where the inflation numbers have come in, the Fed seems to be on board, right? That's our premise until it's proven wrong. So certainly there were some concerns about that, because the good news is bad news is just in regard to how will that impact the Fed and the Fed's likelihood to start lowering rates. I told you, as soon as the market sniffed that the interest rates were done going higher, as soon as they sniffed that, they're like, well, when are they coming down? Immediately. And we even saw it get a little bit overblown. We'll look at that here in just a second as well. Okay, so we still have regular jobless claims tomorrow, and then we have non-farm payrolls, unemployment, and another consumer sentiment report coming out. We still have to see what the Fed says today. We're not expecting anything. Let's just go ahead and look at that. It's a 98% chance, no change today. No change. When we look at the next meeting, we're 50-50, and you can see it actually has gone back to slightly better odds for a cut in March. So I'm going to just call it 50-50 because it's going back and forth. Even odds that the first cut comes next meeting. That's basically what this is saying to us. Okay. As we look at this here, our expectation. So this is interesting because the VIX I would expect to pop back up. Now, what's happening here is we've got a bit of an uncertain and confused VIX signal. And like any signal, things can chop around. So we did have at this point a valid lower high. Very strange, but that's what happened. It came down to here. The problem with that is, at this point, if we're now considering these to be a low and it turns, then all of a sudden we immediately have a higher low. And what we end up with is somewhat of a triangular pattern that's coming in here. So we got to keep our eye on this for sure, right? Absolutely want to keep our eye on this. What's interesting to me right now, and I expect that this will shift here during the morning, is that the VIX is actually down a little bit, right? It's actually down a little bit today. Remember, VIX is a representation, to put it simply, a fear. It's a fear indicator. So on a day when the S&P opens down 0.5%, what would we expect? We'd expect the fear to be up a little bit, but it's not. It's actually still down. So we'll see. This is interesting to me. Very interesting. Let's go look at our opening. Now, over the last 2 days, as we felt like and looked at this market thinking we're overbought, starting to hit some resistance, and all of a sudden, boop, boop, we pop up 2 more days. Turns out this was quite a bullish move right here, right? This was quite a bullish move. So hopefully you were able to get some trades on, capitalize during that trading window. Definitely with today's stochastics, looks like it's crossing to the downside now. We look like we're coming down. And again, I actually have a line drawn. You can see this line I have drawn here. If we pull back to that line and turn, that's quite a bullish looking angle right there that we would be keep it looking at, right? It would look something like that. That looks reasonable. So I would actually be okay with a 3 or 4 day pullback from here. It sets up the next move quite well. It's hard to keep trading out of these things without a true consolidation. So I'm not worried about what I see here. I'm quite excited by it. My posture's increased. I've got a solid bullish posture. Remember the secret to success in trading. Find a bull market, buy the dips. Any bull market will do. So if the stock market's not bullish, you have to look around. Maybe it's in commodities, maybe it's in bond. You can find it in ETFs. You can find something that's bullish. Find a bull market, buy the dips. Works over and over again. That's the basic philosophy. Okay, so let's take a look then at our increased posture. Our long-term trends, we scored higher. We said, hey, it's looking a little stronger. And I would say that this week is even more evidence that we were correct. That's not a weekly chart, however. You can see, yeah, it's accelerated. Now, it's not held on to the highs this week, but definitely. Bob said, might happen. I just read there is almost $9 trillion in cash and money markets waiting in various funds. Yeah, there's a lot of powder in the kegs, and that's been that way for a while. The institutions are flush. That's one of the great things about a full labor market. That's one of the things that helped the pandemic survive. It was a full white collar labor market, which means institutional money flows from people contributing to their IRAs and 401ks and etc. were still coming in. When service jobs were lost, they aren't typical participants in those plans, at least not to the same level. So it wasn't really much of a disruption. Every month we get everybody's contributions coming in. There's constant inflows of capital. So when the institutions take a little break, yeah, there's plenty of money on the sidelines to come in. That's for sure. So we scored this a little higher. You can see we continue to venture above. I think we did this right thing with that increase in the score. As I said, look at my desktop. As I said, I haven't made a change. The short term has been at a 175 for quite a while. Even though we made a higher high, I really feel like 175 is pretty representative of this trend. It was hard, it would accelerate and then go sideways, but overall, I feel like we've caught that one pretty well. If it pulls back and bounces off this line, I might go ahead and raise it to a 2, but I feel like I've got that well represented. We got a good read on the trends right now. The volume story is unlikely to shift because there's no new volume. The only thing that's going to happen is over the next 3 days, we're going to lose this information here, right? We add 2 more days over here. We add Thursday and Friday, and this chart backs up and loses this day, which coincidentally, those were the last 2 remnants of the selling volume. That's it. Our 1-month chart no longer shows any above average selling. That's how that characteristic organically sheds what is becoming out of date data. And at this point, all I have is a couple of good buying days that helped kick off a run. Great. What does that mean? It means my half a point. It means my half a point will prevail. So that's going to stay at least another week. Major market, we'll see, but the reemergence of small caps certainly was helpful. Sector rotation, everything's been firing pretty well. The only concern we've had is now consumer discretionary. Both financial and industrial seem to really move back into leadership positions. The only thing right now is financials. We've got tech, we've got communication services, we've got industrials, we've got financials. That's enough. 0.75 is enough. If we see consumer discretionary move back in, great. We're back to a 1. VIX 1. This has plenty of room. If we ever get like that bullish move where we all of a sudden have a lower high followed by a lower low, bam, bam, that's a half a point, and we're back at a 6.5. Very strong. Everything about the market right now. You know that the stronger the market gets, the more I'm actively looking for the hedge signal or some sign of defensive pressures building somewhere that will help me to be like, okay, let's make sure that when the correction comes, we're ready to take profits quickly, ready to throw a hedge on quickly, and really absorb the when the market has those transitions is when we really tend to give back. So if we're a little better prepared for those, great. We're better traders. Okay, let's get this back out. Let's get to the watch list and just see how everything looks today. Now, from an opening range standpoint, we gapped down and stabilized. It's not we gapped down and then there was more sellers lined up, or we gapped down and then immediately shot up. So a pretty good balance. So yes, there was more sellers than buyers as the market makers came into the office today and got ready to open the market, and that's why it gapped down. But it wasn't like there was so many that it keeps pushing price down. So we're going to get a sense for that. Okay, let's get back up. Yeah, everything here looks in line with what we've been talking about and our expectations. Apple. So Apple has continued to consolidate. I don't love that it dropped back below the 50, but it is still like at this old level here where this gap started, this little resistance level was. We weren't going to trade it anyways because it's reporting earnings tomorrow after market. But at this point, I'm like, okay, Apple is a big percentage of the indices, both the NASDAQ and the S&P. For those to do well, we need Apple to be participating. We want it to be participating. Even if you're not trading it, we're rooting for it. So we'll see what's happening as it's kind of a little bit more of a sell-off there. AIG just sort of continued higher, didn't really give much of a signal. I had this one and closed throughout this little sideways stretch. Then it just sort of popped out. Okay, yeah, would I've liked to have kept some on? Sure, but did I follow my rules? Yes. AMD consolidating. Now they reported earnings yesterday. Expecting 58, got 77, better than expected. And yet it opened down a little and sold off. And today, even a little more. What does that mean? Well, they probably lowered their guidance a little bit, but for me, this got a little parabolic. Of course, this is going to pull back. 150 would be a little much, but for me, anywhere at or above this 160 level, and I think, yeah, I would trade it just to see if it gets back to the old high. Personally, yeah, I think there's plenty of opportunity there. So I'm definitely looking for AMD as all of the tech earnings plays materialize and the information comes out. This is one I'm looking for most definitely. I should probably start my list to make sure I'm ready to go for today's email. If you ever wonder, all of the ones that I say, that's on my list, I'm creating a short list of candidates that are setting up. That list I put in the emails. So if you're ever like, oh, what's the full list? It's in there. Go check the emails. AMD on the lists. Amgen, it's grinding higher. Really didn't give this kind of threw off the trade. That threw me off the trade. And then it moved a little higher. So that was interesting. Earnings are coming up. Nothing there now. Amazon is starting to, if it weren't for the fact that they had earnings, I'd start looking at this as a setup. We just got a new high. It's pulling back. We're looking to see what comes next. Maybe out of earnings. but not till after earnings. That's tomorrow after market as well. So those are a couple of big ones. AXP had earnings. We're still waiting to see when the next opportunity to trade that will be. Boeing. The consolidation has slowed down. So it was really fast for a minute there. It was coming hard. And then it sort of has veered, I would say, this way. That line maybe, I don't know yet. We'll see. But they reported earnings this morning, I believe. Let's see. They were expecting to lose 72. They only lost 47. I don't know. It's hard to want to trade into that, right? BK just strong and grinding, but not really consistent entries. BLDR caught, moved, stalling. Okay, it looks like you could still try. If you've taken some gains, that makes sense, especially since we were at yesterday, we're at that same high. So if you eased some of the pressure by taking some off the table, locking in some gains, looking to tighten stops at this point, move my stop at or above break even. Okay, that's how I want to manage that trade. But we'll see. Press says staying in, mistaking gains. Okay, got it. Still looks very healthy, right? Still looks very healthy. BLK. BLK is a maybe. It's been going sideways, but then you can see where we have a consolidation. We're still above the 50. If it can stabilize at or above this mark here where it doesn't go down to this shadow level, I think that's a maybe. BX. That's starting, I think, a consolidation. So at this point, you can see that the buyers have really kind of come in pretty strong. Back up here. Well, it's not going to make it there in one try. Consolidation now. Looking to see if we could trade into the next bounce. I would put this on my list now. I think it's starting into that consolidative motion. We want to be ready. That looks good. City. Oh, City. Oh, City. I kept one piece. One piece. I told you there was two that I held on to with just one little piece. Is it a big piece? I sure wish it was, but it was not. It was little. But caught some fire. So on this day, on Monday, looking to see, is there something left here? And by the end of the day, it still seemed like there was, and then whoo, little ride. Okay. All right. That's why sometimes we're glad we hold on to a little piece. Caterpillar Perry, you still in it? All right. Well done. Love it. Love it. Love it. Love it. Caterpillar, nothing there for us. It's at resistance. Earnings are a couple of days away. COF, put it on the list. You can see we're starting to get some signals in financials. They moved bullishly and now they're starting into these flag type patterns, whether it's just a flag and then it busts out of it, whether it goes into more of a consolidation, maybe retests the prior highs as new lows. For me, definitely setups developing in financials. And like we said, financials are back in a favorable position from a sector standpoint. Oil, nothing yet. Costco was one that we talked about and liked as being early opportunity on Friday, nice confirmation on Monday, and now it's moving. Is it moving phenomenally well? And you're like swimming in your cash? No, it's moving solidly and getting ready to, possibly present an opportunity to lock in a little gains, move some stops, and see if it can keep moving. We'd love for this move to be one of these. It kind of went straight for a little bit, then paused it. It really moves pretty quickly once it gets moving. So we'll keep our eye on this one. It's not a new entry, that's for sure. CrowdStrike, I would say CrowdStrike is setting up. We're not near earnings. It's been strong. I was like, is this it? And I was like, maybe not, but this is certainly consolidated what we're seeing here. If at any point from here we see this thing turn around and possibly make an aggressive move out of this, yeah, I would say you should be ready for that. Definitely. CrowdStrike's on my list. CSX, if we get an alert this week, it will be from this list, just so you know. It's not going to just appear out of nowhere. CSX, nothing there for us now. Delta. Okay, so Delta is a maybe for me at this point. It broke back above the 50, right? If this is the consolidation, it tried and then failed and stayed in the same consolidation. Now it's tried again. So the question is, does it succeed by holding up, especially near its 50? That's tradable. Does it come all the way back down here? No longer tradable. So I'm only interested if scenario number 1 here happens. If scenario 2 happens, well, it's back to the drawing board, right? Great. Put it on the list for now. DHI. I didn't love this. It got too far. I want to see it do this kind of a thing at this point. That's just me, but I don't tend to trade the home builders much for some reason. They just don't move in a way that for me makes that much sense. DIA looks fine today. Elan, I mean, look, I think a few of us tried it. It tried. It's just not really going anywhere. It is squeaking out just a very small gain from entering down in this area here, but not much. I don't know if it's going to survive on the watch list. Bob says glad he got out. Fastenal. Okay, so you can see that we've had this flag. If you just trade price, yesterday was valid. But stochastics hasn't gone yet. You can see it's still sitting here. The signal's just kind of hanging out for a minute, but that's about it. The expectation we see this is pinching. Yeah, I think this looks absolutely viable. Again, where is it out of? It's in industrials. I like this. In that one, press that. Right? I like it, press. I think you're finding some spots, good spots, as we wait for tech to figure things out and the earnings to come out, right? GE, Perry got that one as well. Love it. GE, I am still going to put fast on the list because it's actually still viable. GE, nothing there. Overextended. Gold's trying to make a little move. It's trying to move back into that trend it had established. It was a little choppy there for a minute. Google, oh, that's where the pain is for sure today. Earnings came out yesterday afternoon. $1.60 is the expectation. $1.64 is what it produced. Problem is, guidance got lowered. Market's responding terribly, 6.5% down. Still above the 50, but it's got to work its way out of that now for sure. Home Depot was one that we said they crushed on every level. Press says missed ad revenue by what looked like a rounding error and it got punished. Yeah, it's interesting, right? I think a lot of it too is just the tone they set when they say, here's what we're looking for going forward, right? I'm putting the Home Depot. Did anyone trade the Home Depot? I held off because of the sector. I'm not in love with consumer discretionary right now. It moved. I mean, if you took it, it would be making a little bit of money. It'd be pushing a little bit. You did and you're out. Did you book a gain, press? I would expect maybe a small gain. Small gain. Makes sense. IBM. Oh, look at IBM. IBM had a beautiful earnings, gapped up. Now it's kind of a wedge or a pennant, which is similar to a flag. Those are all just minor consolidation patterns. Um, looking pretty good. Looking viable. Intel not looking so good. Here's the small caps. Small caps are still hanging on. JP Morgan, like Citi, caught a little extra. Financials, if you don't have a good mix of candidates from financials on your list, you clearly need to get them. Clearly. Meta, I got out. Earnings are coming up. I got out of the last piece I had, pulled back a little bit. Meta still looks strong. We've got to get through earnings tomorrow after market. We'll see what happens. Microsoft, I'm going to put Microsoft as a buy consideration. It definitely looks stronger than Apple. Earnings held up better. They were looking for 275, got 293. But at this point, it looks like maybe a consolidation. Great. I'd love to see this thing pull back. Love it. Looks a little overextended. Netflix. I'd say Netflix seems to be going into consolidation mode. That's got potential for us. Google not great, but Netflix and Meta holding up will certainly help the communication services group. Nvidia, I would say let's put it on our lists. It looks like it could be moving into a consolidation mode. Picard is consolidating. Looks a little bit like Fastenal. Waiting to see if it pops out of the flag. PNC, there's better. There's better financials than, forcing it with PNC. QQQ looks like it's pulling back. SMCI, nothing there. It's just kind of popping around. Looks strong though. SPY on a pullback. We're down 0.62. UNP, we were looking at UNP and it just sort of popped out of it. There's nothing there. So the VIX, like we said, has turned back up. I don't know. That's a tough one with the VIX there. It's hard to read that as a higher low. I'm still looking at this as more down than not. We'll see. Very interesting. Press says, with all these great setups, strong market posture, what risk do we have with the Fed speaking today? I mean, we have great setups, but we don't have triggers yet. So the Fed might be what is the catalyst for triggers. Or the Fed might say something where the market's like, oh, we know how the market can overreact, where people think, oh, that's not great. And the market pulls back and then everyone realizes, wait, no, it's not that bad at all. And then turns around and that was the last remnant. Yes, we have great setups, but we are waiting for those setups to provide triggers. They're all just in consolidation, but they haven't turned yet. So we have a lot of things. We have a lot of things that just hit highs, and we have a lot of things that have started to pull back. Only a few things have really given a signal. BLDR gave us a new signal. Not a lot of things have given new signal. And Bob said it well. He says, feels like everyone's holding back for the Fed news. So there's definitely a good amount of that, right? That indecision, waiting for the information to come over today, tomorrow. I really don't think there's a lot built into this because no one's expecting the Fed to do anything. The only thing that they might listen for is their verbiage that they think gives them early insight into March, that it's more likely or less likely. Because right now we've been hovering and fluctuating on those 50-50 odds as to whether or not it goes up or not. Waste management. It's kind of a grinder, meaning it just sort of meanders, but doesn't give us a lot of good pullbacks. I'm still waiting for a pullback. Walmart, oh, Walmart. We re-added it to our list, and you can see it's given these signals, but it's it's this like these large candles that make it tough. That was valid. That was valid. And here it is, almost back to old highs. XPI moving around a little bit, materials moving around up a little, but not much. Communication services starting to pull back. Fine. They just made a new high, like an outrageously higher high. So a little pullback, not bad. Energy stabilizing financials looks fantastic. Looks fantastic. Looking for a consolidation. Industrials looks fantastic. Now here's what's hard is it's a little mixed. We have some that have already consolidated, but this looks like it's a little at resistance. We'll keep an eye on that. Technology looks great. It's in its consolidation. If all you did was show me this chart and say, what do you think about this? I'd be like, that looks very bullish, but it got overextended. And right now I'd be waiting for this consolidation to play out. But overall, it looks very bullish still. What else? Staples, little bit of a pop in the staples, but not much. It's still really on the same trend there. XLU, we don't see much there. XLY, consumer discretionary still seems a little bit concerning. That's where we find ourselves. A lot riding on Apple earning, a lot riding on earnings. We've got earnings still, we've got the Fed still. So we'll see. Now remember this week, we are working on our routines. We just worked on a morning routine. My morning routine is a lot like what we just did here. I start off by looking at the futures, looking at the news. I look at the impact that it's likely to have on trades that I have on. I look at signals to see what's setting right. And then we should have a routine for during the market to see, did any of our signals give triggers? And if they did, let's build them and take them. Did any of our trades give signals to exit? Then let's exit. And then later tonight, I have a routine where I will process it and be like, how did I do? What am I thinking? Did I think right? And then we have a routine on Sundays where we posture and we make sure our record keeping is up to date and we process our analytics to make some observations and right, all our back office information. So all of this should be very scripted, very, very scripted routines. Make sure that those are in place. If you look, there are videos specifically about the routine section. There are a couple of them that I'm posting in the emails. So if you're not looking at the emails, there's good info in there. You can see the current short list. You can see what trading plan section we're working on and the corresponding videos if you want to watch those to help go in and get a little work done. Remember, 1 hour a week. 1 hour a day, an hour for 1 day, a half hour for 2 days, 20 minutes a day for 3 days. Give me an hour a week completely dedicated to your trading plan. And the videos don't count. I mean, actually working. So videos adds an extra like 30 minutes. All right. It's good to see everybody. Have a great rest of your day. I will see everyone tomorrow night at the Trading Foundations. We're talking about systems, strategies, and rules. Really helpful stuff to help develop this trading plan, to have a better sense of what am I trying to do with how I, the verbiage I use, etc. So I'll see everyone tomorrow night. As always, happy trading.